Minimum tax was introduced by the Finance Act 2020 at the rate of 1%, and it was to be due on the 20th of the 4th, 6th, and 9th, and the 12th month of the year of income. Currently, it faced a litigation from the Kajiado bar owners who took it to court, and it's pending a ruling. So currently, it's not into effect. We expect that when it comes to effect, in case it goes through, then the penalties and the interest accruing from the past month that it was stopped will be surcharged to the taxpayers, as that was the case according to the court. Actually, Kenyans love reactionary actions. Like, you see, minimum tax was something that passed through public participation, but they didn't stop it there. They waited for it to be an act so that they can stop it. You know, when you stop it, when it's an act, now it develops a lot of problems. The same applies with the furniture excise tax that Erastus has talked about, where Omkio Mtata has also taken a court case. From yesterday's daily, we can see it was stopped from being enacted because of Omkio is claiming that there was no public participation, enough public participation to pass the 25% excise tax on the furniture importation. Actually, minimum tax brought about a lot of debate when it comes to the companies that are making losses. You realize that you are to make losses but still pay taxes. It was like taxing somebody who is already at his lowest. And I think the court will rule in favor of those who took it there. We wish so, because it's more of a punitive tax rather than a tax that can help Kenya grow its economy. When we check on digital service tax, this one was also introduced by Finance Act 2020. And it has not been clear so far until this Finance Act 2021 that has made it now clear. Its main intention was to align it with the BEPS action plans, the Base Erosion Profit Shifting Action Plan 1, which talks about the digital service taxation. And what we see here is that now it will be limited only to non-residents, making it now, for the residents, you don't have to worry about the digital service tax, but some of the services that we need to take care of that will be taxed are those who are having website hosting, those who are on the sale, licensing of data, subscriptions, electronic data, e-book and e-ticketing, and any other services that is provided through digital marketplace or over the internet. It's key to make sure that you understand that it's only on the digital marketplace and over the internet that it will be taxed on. For voluntary tax disclosure program, this is a program that was brought about by Kenya Revenue Authority as a way of increasing their tax, the amount of tax they collect. They decided to consider clemency on all those who have been hiding their taxes, those who have been evading taxes for the past 5 years. Here, the KRA is now saying, look, come, let's agree on how you will pay those taxes that you have been evading for the past 5 years. Upon agreement, if you agree to pay it within this year, this is 2021, you won't pay penalties and interest 100%. But if you say you feel like you can't pay it within now, right now we are in the 7th month. So you say, look, my cash flow does not allow me to pay for the principal tax that I've been evading. So let us agree on a schedule of payment. Then if you were to pay next year, then you will be only exempted for 50% penalties and interest. And if you are to pay the third year now, you will be only left with the 25% penalties and interest that they will exclude you from paying. Otherwise, you'll pay the rest, the 75% remaining. VTDP is a good idea. It's one of the, like here in Ronalds, currently we are handling a lot of people who have come clean, and they are saying, look, let's argue with KRA, let's come clean. You give all the material facts, you give all the material information that is needed. If you hide, KRA, according to the VTDP, they said, whenever you hide a material fact, then automatically they cancel you for VTDP. You have to come clean, come with all your, like the Bible says, you come with all your luggage. So you come with everything, and you disclose everything, all the nitty-gritties. And KRA will consider clemency and release you from the tax. And in fact, they give you a certificate so that you become tax compliant henceforth. So from there, you are now a clean person. You can now transact freely. And you have to take note that if you don't take for the VTDP route, mostly you see KRA now has even brought a iWhistle. iWhistle is a platform where if somebody, let's say, wants to report you for not paying tax, they can log into KRA and just report you saying, I know so and so who doesn't pay tax. So in this case, you see, you will be exposing even yourself more. You better come clean, go and pay the taxes, or the iWhistle part will catch up with you. And it's very risky when it comes to being reported. You see, iWhistle, the person who will be reporting you will be gaining at least, at most 2 million. But you will be paying the taxes plus the penalties and interests, which if you are to consider the VTDP route, you could have not paid. Nullification of deductible expenses. Okay, according to Finance Act 2020, there were some of the allowed expenses that were now disallowed henceforth, beginning January 2021. That is the entrance fee on an annual subscription paid to trade associations, club subscriptions, paid on behalf of employees, and incidental capital expenditure legal costs relating to listing. So whenever you incur costs when you want to list or float your shares, now it will be a disallowable expense, and therefore it will be taxed accordingly. Those are some of the few changes that were brought about during the 2021 regime. It's very important. I'll really encourage our clients to take the VTDP route for those who feel that they are not compliant. There is also another incentive that, not an incentive per se, but a new development that is coming on in terms of VAT, value-added tax. There is the Tax Invoice Management System, TIMS, that is to be effective by August. You need to take keen care of it. It's where KRA is just trying to integrate the ETR machines, the physical ETR machines with the KRA system, so that whenever you make a sale and enter, and whenever you make a sale, it will be reflected real time to your KRA system. So filing taxes for VAT will be a very easy work, since sales will be already noted there. It's something that is starting August and will go for a year. After that, failure to comply with it, you will be surcharged according to the Tax Procedures Act. If you feel like 1 year is not enough, you need to inform KRA 30 days before the 1 year ends, and tell them, look, I can't comply with this, give me another 6 months.